Hi there, this is Victor Louis, and I'm the head of investment strategy at Sankore Global Investments. This is your weekly financial markets roundup. We start off in the US, where the markets ended Friday's session in the reds. The Dow Jones Industrial Average dropped 1.24%. The S&P 500 was down 1.46%, while the Nasdaq Index declined 1.62%. All major averages notched weekly losses. I mean, they were essentially down for the week. The Dow ended the week 2.3% lower. The S&P and the Nasdaq, the tech-heavy Nasdaq Index, lost 1.56 and 0.45% respectively. I mean, for the market last week, there were very strong concerns about, the sticky inflation situation. As we saw the inflation report for March come out last week with a rate of 3.5%, which was higher than the 3.2% expectation year on year. So this basically raised concerns about the fact that inflation was still hot and will certainly be sticky downwards, and obviously significantly reduced the prospects of a Fed rate cut even in June. Also, we had very considerable geopolitical concerns as well in the market relating to the Israel-Iran situation. The U.S. intelligence community had released reports stating that there was going to be an imminent strike on Israel by Iran. So that obviously heightened tensions around the Middle East, sending crude oil prices higher as well. So these were some of the concerns that kept the market sentiment really, really low, last week. We also saw banking stocks take a beating last week. JP Morgan posted a weaker than expected net interest income results, while also expressing concerns around the inflationary environment in the economy. This created concerns, really broad-based concerns around the market, and saw the market close lower for the week. Going into the week, really, I think that the geopolitical situation will remain front and center as investors continue to keep an eye on earnings results that will continue to come out this week. We expect to see Goldman Sachs put out their results as well, and a couple of other banks this week as well. On the economic data front, we expect to see retail sales this week. We also expect to see ISM manufacturing data this week. I mean, these data points will be closely monitored. If we see very strong readings there, it would then continue to put this strong impression that we're certainly going to have these interest rates higher for longer. Again, we'll keep an eye on these as they have the potential to really dictate what the near to medium term market direction would be. Now, on the Israel-Hamas situation, over the weekend, news was reported that Iran had fired over 300, drones, cruise missiles at Israel. About 99% of that was successfully shot down. But nevertheless, this essentially raised, the scepter of risk in the Middle East, as this was the first direct confrontation between Iran and Israel since the Iranian Revolution of 79. We, however, continue to keep an eye on how Israel would react, to this latest round of salvo. Again, it will continue to determine how things go in the Middle East. Obviously, eyes are on crude oil prices and all other commodities as well, as this crisis will have a potential, if not curtailed, to continue to push oil prices. However, we haven't seen oil prices react very strongly in the aftermath of the attack. I suppose markets again are believing that this will probably be it, and that Israel would not react, and that everything will basically just cool off from here on out. That again really remains to be seen. On the local front, last week was a holiday shortened week, really, due to the Salah holiday. The DMO conducted a PMA auction on Friday, where it offered about 146 billion across the 90, 180, and 364-day papers. The auction was heavily oversubscribed, with bids about 1.7 trillion tilting towards the one-year paper. The rates on the 90 and 180-day papers were unchanged, while the rates on the one-year paper dropped by 42 basis points to close at 20.7%. Now, this drop again continues to reaffirm our assertion or belief that we are likely to have peaked in terms of the rates that we're seeing from the DMO, and the rates are likely to hover or go downwards from here on out. This, however, depends on the price stability dynamics that we see going forward. So obviously, we've seen quite some gains on the FX front. Inflation still remains sticky. Inflation number for March will be released today. So we're looking forward to see that, to get a sense of whether there's been some progress on that front. So the sort of progress that is made on that front and also on the FX front would determine whether the Apex Bank can carry on to basically reduce rates from here on out. Also, there's a bond auction that is happening today. I mean, participants really will be glued to the outcome of that auction to get a sense of the thinking of the DMO at this point with respect to rate direction. And the outcome really would prove very crucial in determining rate direction, at least in the near to the medium term. These are the key things that we're looking at for this week, and also a roundup of what happened last week. We hope that you have a very, very productive week. Thank you very much.